Hi, I'm Scott Mentzer, broker-owner at Orchard Hill Mortgage, and I'd like to welcome you to the weekly mortgage update. Let's take a look at last week's mortgage rate recap, and mortgage rates improved throughout the week until Friday when jobs data report came out, and that report had job growth and it exceeded expectations, causing mortgage rates to increase at the end of the week. The jobs report showed that unemployment was at a 53-year low. So, great news for employment, but not for mortgage rates. So let's talk about mortgage rates this week, and rates could creep higher this week. In fact, I'm recording this on Tuesday of the week, and Monday was not a good day for mortgage rates. They did increase several times throughout the day, still having the markets respond to Friday's jobs reports, and the markets are expecting the Fed to continue their course of increasing rates. So rates could move much higher this week, most likely a volatile market throughout the week. Let's take a look at what's affecting rates this week. Three main items: economic data, inflation, and the Fed. For economic data, we have a few Treasury auctions this week, and then there's Friday's consumer confidence reading that could affect rates. The Treasury auction should not be an issue, not a concern at this time. Inflation, though, the CPI inflation data report will come out next week. Markets are concerned about that, and they're hoping to see a continued slowing of inflation. If that's what we see next week in the report, that would be good for markets. If we see anything else, that could be an issue for markets and mortgage rates. And then the Fed, so markets are now starting to price in a higher peak later in the year. Originally, the markets thought that that peak would come in March and most likely be at 4.75. They now are pricing in that it will be later in the year because of several things, one being the employment data report that came out on Friday of last week, and then also the inflation. If the inflation tends to go back up because of that report, then that could affect what the Fed does with their interest rate and future increases to their rate later in the year. So that's what's affecting rates this week. So I wanted to look at one news item this week, and I have mentioned it a few times already, but I found this article, and it's headlined, "January Jobs Report Blows Expectations Out of the Water." So if you haven't heard me mention this already, you haven't heard it in the news, last Friday was the jobs report, and it came out with that there was a gain of 517,000 new jobs in January. And this is not what they were expecting. Different data reports thought that it would be around 185,000 to 188,000 new jobs. So this was a lot more than that was expected. And we've seen growth in most of the area. They were expecting the jobs report to be affected by post-holiday season layoffs, and it was not. So there was gain there. There was a strong labor market in general. We saw a boost to the services sector and the construction sector, and then with 53-year low for unemployment. Unemployment is down to a rate of 3.4%, so the lowest it's been in 53 years. So, this is great news for the job market and the economy, but not for inflation and most likely not for mortgage rates. So, we'll have to keep following this and to see how this will affect rates in the coming weeks, and also how the Fed will respond to this. Again, they don't meet until March, but they are having news conferences after their meeting last week. They had a press conference, which the markets responded well to, but a couple of the Fed members will be speaking on Wednesday and other times this week. So how they respond individually as members of the Fed, and what they think about the jobs report and some of the other data that will be out, could affect rates. So we will have to wait and see what happens with that. So that's all I have for this week. Thanks for watching another episode of the Weekly Mortgage Update. I'm Scott Mentzer, Orchard Hill Mortgage. And if you or your buyers have questions about mortgage scenarios, their unique situation, please feel free to contact me, give me a call, email me, and I'd be happy to set up a meeting with you and your buyer to discuss their mortgage options. So, thanks for watching. Again, Scott Mentzer. Have a great week.